Hey guys, did you know that there are 12 pain points that every trader can either control or be controlled by? And having traded for such a long time, I know that I've been impacted on the negative side of these pain points. And what I want to do is just go over here. Like I said, there's 12 pain points. We're going to cover those today. And what's the most painful thing that ever happened to you when you were trading? Leave a comment down below. Have you ever blown up account? I know I've blown up 2 accounts. And let me tell you, the pain of blowing up account was really significant. The pain even got worse when my wife found out. So tonight we're going to jump on talking about the pain points. Welcome to this session of the Bay Area Moneymakers. It's our IBD meetup group that we do once a month, and this is a free session. This is the first time we've actually done the session on both YouTube Live and the webinar via StreamYard. And so wherever you might be checking in from, please let me know where you're coming in from. I see Jim's on board because the chat box is a little bit different than what we would expect from the regular Zoom type meeting. But you're in the right place. If you're over on the YouTube channel, just say, hey, I'm over here on YouTube. But again, just let me know who's out there because I can see the people coming in. But unlike Zoom, I haven't got a clue unless you let me know who you are. So at least say, hi, how you doing? Aloha, God bless. And with no further ado, let's jump into today's session because I want to respect the people who are on the East Coast. I want to respect you with the time. And so let's go ahead and get going. I am really excited about this evening because I think we're going to be able to cover a lot of stuff very quickly. I'm going to do a couple of things there. There we go. Get that shifted over there. So, hey, Jake, how you doing? Aloha. Hey, Barbara. All right. Nice to have you on board. So, as I said, in respect for your time, let's jump into what am I talking about? I'm talking about basically breaking free from the pain. The pain that kind of comes from not being prepared. Got a really good session. You're going to find that this session is very interesting because it's going to do a couple of things. One, we will, at the end of it, get into charts and all that kind of stuff, taking a look at the various potential trades we have coming up, our normal Bay Area Moneymaker session. But right now, I just want to jump into what the heck is happening with pain. So the 12 pain points, and most people don't realize that there are 12 pain points. So perhaps, did you know that mastering your trading pain points could be a game changer for you? I know it was for me. You ever wonder why some traders seem to ride the waves of the market, with ease, and others get caught up in the tide? Most of you know I've been doing some research here lately, understanding what it takes to be a winner and also understanding how our expectations for our trading will either set us up for success or they'll set us up for failure. And it's not so much that they're negative expectations, but maybe we just don't expect very much out of ourselves. And if that's the case, then we can, in fact, that can contribute to, basically failing. So here's a pro tip. Hey, keep your trade journal handy because you want to jot down a lot of these. The slides will be provided on my training website over on Samcart, along with the video. You can also watch the video anytime you want to over on the YouTube channel. And again, if you're just checking in, please let me know if you're online because it's a little bit different than the Zoom. I don't know who's out there. I know that Barbara's, Jake, and Jim are there, but there's a bunch of other people who are out there also. So, did you know that, as we unravel these challenges, make sure you take some good notes. And let's go ahead and get started. And what are the pain points? The number one pain point that we run into is inconsistent trading results. Oftentimes that's due to planning. But did you also know that the inconsistent trading results can lead to both mindset challenges and physical challenges? Can just imagine, okay? The mindset or mental side of it, psychological side of it is you have a frustration and self-doubt with these inconsistent trading results. And matter of fact, you can actually click in and focus so much on trying to fix the bad results that you wind up getting more bad results. So that's one of the mental sides. And as we walk through this, I'm going to go through every one of them in greater depth. We're not going to do that here, but when we get into the slides. And this inconsistent trading results can result in physical damage to us because it can make us really tired due to over-analyzing our trades. Number two is a lack of dependable strategy. And you know what I'm going to do right here really quick, guys? I am going to hopefully try to blow these up so you can see them a little bit better, because it may be a little bit of an eye test. Let's see if we can get this down into, I don't know if that's going to give us what we want or not, but we will blow them up as we keep going. So the lack of a dependable strategy can psychologically give us issues with indecision and constantly searching for a dependable strategy. And if you're an engineer, you can always fall back, oh, I'll reinvent the wheel myself. And that, I think, is one of the reasons why more engineers aren't better traders, is because they're always trying to make it better rather than just utilizing the simple facts of it's working, so why monkey with it? Now there are some tweaks you can do to make things better. But what are some of the physical aspects of it? Believe it or not, eye strain, because you're actually continuously looking for a new strategy, or it could just be a strain that just can impact a lot of different things. The other one is emotional decision making, which can lead to a psychological response of impulsive trading or post-trade regret. Anybody ever had a post-trade regret? I know I have. I've been, why did I do that? And that can cause you to slip into issues where you start calling yourself bad names. Like, one of my favorite, things I'll be sometimes mutter under my breath is I'll go, Dennis, you dumbass. Now that's not very complimentary and certainly not really great for building up my esteem to be able to become a better trader, right? And so, but that's one of the things I do. So some of the physical aspects of that is actually increase heart rate because of the emotional issues during tense trading sessions. What about risk management? Risk management, anxiety over potential losses and or potential gains. This also can cause sleep disturbance. How many of you have ever been asleep and or been in bed sitting there thinking and worrying about a trade that you've got going on? You don't have stop losses on. You're going, oh my gosh, it's going to gap against me in the morning. Just say yes. Put a Y down in the comment section, please, and say, yes, that's me. I've done that before. I know I have. And we traders are a lot alike. So next, limited time for trading. This can be really overwhelming, especially if you have a full-time job other than trading. Almost feel like, well, I want to be trading, but I have to be at work, and you're just kind of feeling this guilty thing going on. Physical fatigue from trying to balance your trading with other responsibilities. Number 6, fear of making incorrect decisions. And again, that comes back to the psychological side of you get this hesitation. It's like a golfer who misses a lot of bad, a lot of short putts. He gets what's called the yips. And the yips just leads to more bad putts. A fear of losing capital. It's, the mental side of it is a constant worry about and risk aversion, so much that you can actually freeze up and not be able to take a trade because you're afraid you're going to lose. And I hate to say it, but if your focus is on being afraid of losing, it's likely that the trade you will put on, your basically subconscious just blinds you to how you should be putting the trade on, and you'll wind up getting a loser. And the second part of that is stress-induced digestive issues. Wow, we're covering a lot of things. And I don't think I've never seen anybody really talk about the pains of trading and try to connect some of those physical things. And so if you have, kind of a psychological background, a medical background, and all that kind of stuff, and some of these physical or mental issues you're aware of, and and if you can just confirm, yep, Dennis, you're on track. So number 8, not reaching financial goals. Well, one, from a psychological standpoint, you can be discouraged, lose motivation, quit because trading's too hard. And then the physical side, stress-related ailments impacting your overall health. Next is number 9, lack of clarity and confidence. This, of course, leads to additional confusions, indecisiveness, and it's, if you think you're a decisive person because you've always been being able to make decisions, to be in control, that trying to make decisions in the market, unless you're working from a really structured plan, will get you into nothing but trouble, because we don't have control over that IBD. That's terrible, Jake. Anyway, so the other part of that, physical headaches from overthinking, tension from overthinking. Number 10 is impact on emotional well-being. Again, mood swings. And what's really funny is those mood swings, they can erupt and impact the ones we love, although it's due to being ticked off at ourselves because of a poor trade decision. So that's kind of interesting. And then with that can also go weight fluctuation, overeating, emotional eating. A lot of different things are all tied to this. This is crazy, but I mean, it is. I have done my research, and these are all real issues. And so, number 11, concern it's too late to build wealth. And the fact of the matter is, it is never too late to become the person nor the trader that you want to be. This part can lead to, worry and sleep issue, financial anxiety. Yeah, it sounds like we're covering a lot of different stuff. And then informational overload. Information overload can lead to, from a psychological standpoint, analysis paralysis and or distraction. That's one of the, and so physical aspect, headaches from processing too much information. So understanding these pain points is the first step towards creating a more stable and successful trading experience. And so, as I said, hey, Rick, how you doing? Good to see you online. Hey, Reto, good to see you also. So what else is next? That little quote there by Mark Douglas is basically traders should focus on one system and work to master it through practice, discipline, and patience. A quote from Max. So let's meet John. Of course, I have to introduce our guest trader for tonight. John's a trader all too familiar with the highs and lows of the stock market. And John, here he is in his home office, his eyes glued to his laptop, charts and numbers flickering, a cup of coffee, long gone cold, of course. He's every bit the dedicated trader, yet despite all his hard work, he finds himself stuck in a frustrating cycle of ups and downs never quite achieving the consistency he yearns for. Now imagine John grappling with, the 12 trading pain points, because the thing about these pain points, folks, is they can pile up on you. So it may not just be one of them, but it may be a combination of several. He's battling inconsistent results, feeling overwhelmed by the lack of a dependable strategy, and often finds himself swayed by the heat of the moment, making emotional, impulsive decisions that he later regrets. Each pain point is like a thread which is woven into the net that holds John back, pulling him into a downward spiral. And oftentimes, depending on how long you've been trading, you may at some point have felt like, hey, I'm in a downward spiral. This is not getting any better. And Mark Minervini talks about that downward spiral in his book about the mindset of winning, that we can also develop, and these pain points can put us into a slippery slope where we develop a mindset of losing. And subconsciously, we fool ourselves into making decisions that actually are really low probability opportunities to trade, that wound up not doing well. So as we peel back the layer of John's trading journey, it will become clear that these pain points are not just obstacles, but they're opportunities for growth and transformation waiting to be seized. So what is John suffering from? Well, number one, he's suffering from all 12 of the pain points, and they tend to gang up, as I said. Let's start with number one, inconsistency. John starts every trading day or every trading week with mixed hopes and apprehensions. His inconsistent trading results have become a troubling pattern because they keep repeating over and over and over again. But more often than not, the highs are followed by lows, and it seems like the lows are continuing to get lower and lower. So trades that don't just miss the target, but they lead to significant losses, because he's basically thrown out the window any kind of rules that he might be utilizing. So his confidence takes a hit, his capital takes a hit, and he's on a mental roller coaster that's just beating him up. It's like he's, boxing with Mike Tyson's and taking the body blows from Mike Tyson that continues just to beat the snot out of him. He keeps asking himself, why can't I get this right? He asks himself over and over again. He's covered with shame because he basically has been doing it for a long time, but his results suck. So physically, and stress manifests itself also as he feels a constant nagging fatigue, a direct result of sleepless nights spent poring over charts, trying to identify what he's missing, even bad dreams from what he's missing. His eyes are often strained and his head throbs, tension. And of course, is this an extreme? Maybe, perhaps, but it may be speaking to you. Because basically because he has inconsistent trading results, he feels it both psychologically and physically. In his state, John recognizes he's caught in a downward spiral. And so he's mentally frustrated. This is the mental side of it. So what's he feeling physically? Fatigue over analyzing his trades and regret. It's because his pathway just isn't clear. Number two, lack of a dependable strategy. John also faces the issue, faces the reality of not having a solid, dependable trading strategy. Did you know that you can develop a trading strategy? I give mine away, actually, to anybody who asks me for my trading rules. I'll give you my trading rules. Now, will you have the discipline to take those trading rules and apply them to your trading? Because they're proven to be successful. But what will you do with it? where you just basically go, okay, just another set of rules. I don't have to follow them. I'm going to carve my own path and all my own way. When, some of the greatest masterminds in America develop businesses not so much by cutting their own path or basically exploring their own way, but they pulled together the knowledge from a lot of different people. And I don't know why it is with trading that people tend to disregard the path that has already been put. So they could basically step up on the shoulders of people who are already being successful and be successful really, really fast, really much quicker than they could if they were trying to invent it themselves. And so with this, you get into the mental aspect of wrong thinking and wrong habits. And those habits, once they start to embed themselves, the longer you maintain those wrong habits, the longer it'll take you to break free of the wrong habits. And they can leave long-time scars that take a lot to get over. Some people actually have to go into counseling or find a really strong mentor that can work them through the challenges of lack of getting over the wrong habits. Next, physical loss, losing sleep. And so in this state, John realizes the profound impact that the absence of a dependable strategy has on his physical well-being. The connection between his trading practices and his health become undeniably clear, pushing him towards the acknowledgement that establishing a consistent strategy is not about improving his trade outcomes as much as about preserving his health. Number 3, emotional decision making. John faces a significant hurdle with emotional decision making because each trading day or every week he's swayed by the market's fluctuation. He'll sit there and sometimes he'll watch the either pre-market or aftermarket and try to make decisions off of what the indexes might be doing, or rather than having a set protocol that basically what will I ignore, what will I accept, and what will I ignore of these sways and ebbs and flows in the market, which adds to his emotional roller coaster because he's indecisive and he's going, oh no, it's going to. So John's fear kicks in, prompting him to sell too early, buy too late, and then regret whatever he's done. So as you see, the spiral continues to move down. The consequences extend beyond his trading desk, though. So impulsive and post-trade regret. It leads him to having things like increased heart rate. And I know from an emotional standpoint, when I used to work in the corporate, I was working 10 to 12 hours a day, 6 to 7 days a week, and I wound up with I don't know if it's a heart issue, but I'd have heart palpitations, and I could feel it in my chest, going blah 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 blah. Well, those are the same kind of things can happen when we get so deep into the aspect of emotional decision making. The consequence of extended bond is trading desk, as I said, and stress disrupts John's sleep, leading to restless night filled with second guessing and worry. And and oftentimes a trader doesn't recognize the unsustainable nature of the approach they've taken to trading. Number 4 is the pain of risk management concern. John's journey through the trading world brings him face to face with a crucial aspect of risk management. And so the anxiety over potential loss. And how many of you have just been anxious and felt that anxiety about how you're trading? If you have, just throw in a Y. And so I hope you are enjoying the session. Just drop in a, yeah, yes, you are. No, you haven't. So anyway, this risk management aspect, it often leaves him exposed to unnecessary loss. Part of the thing is also because since he's not playing with a strategy, not trading with a winning strategy with an edge, and he's just basically throwing it up against the wall to see if it sticks. That the issues compound. We normally think about compounding as a good thing. Well, if you're full of negative expectations, they can also compound to become where you get to the place where you're absolutely, I won't say useless, but you're an accident waiting for a place to happen. So what are some of the physical attributes of this? Well, sleep disturbances. There's a lot of sleep disturbances with this thing. It must be because the old adage of, our chickens come home to roost, but he spends a lot of time, he spends a lot of times basically Monday quarterbacking his past trades, but he's fretting about them rather than what can I learn from this and how can I do better? He's just basically angry, saying, well, if I do more of what I'm doing, it has to get better. And that is a huge lie. Number 5, limited time for trading. This is something, especially if somebody's working for a living. And it's not that if you trade, you're not working for a living. But if you do, if you're working in, not just trading, this can be a huge issue. It can also be a huge issue. Let's say you're not, let's say you're working out of a home office and you have a family and you have all of these other demands on your time. Well, this can be a huge issue. Where do you carve out the time you're going to spend specifically for trading? How do you block your time and make it just about trading? So you can feel overwhelmed, rushed, and rushed with your decision making. And this is one of the reasons why I designed the AutoPilot trading system to where we made our decisions after the market hours. So you're not getting pinged with the emotional response to what the market is currently doing. Because if the market is live, they design it this way, guys. It's a secret. They design it this way, okay? Where that's why they put the tickers across the bottom of the page on some of the financial network channels, because they found that elates emotions, and elated emotions cause for a lowering of IQ and hence dumb decision making. So now you know the truth. There we go. So fatigue and balancing, from balancing trades with all your other responsibilities. Have a hierarchy. What are the most important things you could be doing with your life? And clearly, if you have a job where you're responsible to an employer, that has to be a high priority. If you have a family, I hope you will make your family and your kids, your grandkids, and all that kind of stuff a high priority. Higher priority than trading, and then find the extra space you're going to need to do some, working on your trading. But excuse me. So that's one of the ways to take care of that. The fear of making incorrect decisions. Excuse me, just a second here. Okay, the fear of making indecisions. Confronted with the fear of making incorrect decision, John notices that his apprehension holds him back, causing him tension and hesitancy. And he learns to embrace he's learned to embrace a mindset of calculated risk, understanding that every trade needs to be perfect but doesn't need to be perfect, but well considered. But this one can lead to the hesitation, that yips type of thing, and get you into a cycle of second guessing what you're currently doing and how your trades are doing. And that second guessing is also evidence that you're not trading a solid winning mechanical system with an edge, and you're still emotionally and impulsively trading. This can cause a lot of the fear of incorrect decisions. It can impact a lot of other things physically, not just the mental side. Part of the mental side also is just ego. Some people just think, oh, I'm never going to make a mistake. I'm never going to make an error. And that's one of the reasons why they will stick with a trade that's a loser when they should have exited at 5%. So this can lead to muscle tension, especially during critical trading decisions. So we'll get into the solutions in just a little bit. So what about the fear of losing capital? I think everybody dreads this. Constant worry and risk aversion. It just haunts John because he's lost so much already. He's watched his 401k turn into a 201k, and that was his retirement, nest egg for he and his wife to be able to live comfortably. But all of a sudden, he feels like, I am really screwed on this, and it's not going to end up well. But he needs to embrace what is going on, because this can also add to stress-induced digestive issues. I think they call those ulcers, right? I think so. So what about not reaching financial goals? I think this number 8, I think, is one of the largest issues, because those past failures kind of haunt you. I mean, literally hang out around you the way these guys are doing. And so John faces a familiar foe, the haunting fear of not reaching his financial goals, and a specter that weaves together his past failures and disappointments, and in his his mind, his negative mindset, that little voice that whispers and says, you're a loser. You always lose on this kind of trade. You suck. You're not doing very good. And basically provides ammunition to keep him in that cycle that we saw earlier. I mean, it sounds crazy, but that's exactly what happens. And so the ghosts of past endeavors were where he fell short. They whispered doubts, stirring a deep-seated fear that history is going to repeat itself again and again and again. The anxiety isn't just about numbers, but it's about a narrative that John's mind replays, framed each setback not as a lesson, but as a prelude to the next failing. And I think this is also a great place to interject. I'll interject that towards the end, I hope. If I forget about it, guys, I want to interject a piece about what Mark Minervini says about that, and how to handle failure, and how to handle, bad trades and all that kind of stuff. So discouragement, loss of motivation, all kinds of stress-related impact. I mean, we're in so much trouble. Geez, that's okay. Hang in there, because there is hope. There really is. So lack of clarity. When we have lack of clarity and confidence, and this is where John was, when it's paired with pain point 8, which you just covered, it creates a cycle of continuous doubt, frustration, because John's just not clear about what to do. And he embarks on he tries to learn, but he basically just jams and reads and does all that kind of stuff, but he fails to take it to the next step of applying the learning so he can grow some wisdom. So mental confusion, indecisiveness, headaches from overthinking. That's great. Number 10 is the impact on emotional well-being. The impact on emotional well-being is, I think it's kind of a combination of everything piling up on him. And it eventually takes its toll because he doesn't understand how to take a break and back off. He doesn't understand how to really evaluate what he's doing, because since he's not training with a plan, he has nothing to basically say, okay, here's how I'm going to guard and judge what I'm doing. So he'll experience mood swings and negativity. And negativity, of course, just feeds his failures. This can have the impact of, I love this, weight fluctuations due to emotional eating or neglect. And, and I have to say that, oh gosh, I have to admit something here, is that I'm a nerve. I have been in the past. I am not any longer, because I've really done a really great job going with an intermittent fasting. Since the 1st of January, I've dropped down to about 25 pounds, and I'm just feeling light and just, and a whole lot younger. But I was a nervous eater. And I would just kind of like look for these little snacks because I was nervous about whatever. And, but once I got that under control, and also did a lot of journaling about what was causing the nervousness to happen, I've been able to stop being that. And I have an objective to be down to 180 pounds by the end of June. And I'm sitting right now at 192. I'm down from, what am I down from? I'm down from 216. So how about that? You can give me a plot if you want to. I'm really pleased with that. Plus, it means I'm going to be around a lot longer to help people out with their trading. Number 11. This is an additional pain point that I've added, because I find that this affects traders, affects people, not just traders, but affects people from the age of, I would say, 25 on up to 85, is they're concerned that it is too late to build wealth, or I don't understand, or they basically, it will be too hard to learn how to build wealth when they're younger. And they get to a point where that little voice whispers in your ear, it's too late. There's no need for you to do anything because it's too late. It's too late. It's too late. And one of the biggest things I think that will help you is learning how to tell that little voice in your head, just shut up and leave me alone, because what you're lying to me about just isn't true. So this can lead, if you think it, literally believe that it's too late, it can lead to despair, to urgency. Again, emotions that are not necessarily great for putting together a winning trading system. So it can lead to sleep issues that are related to financial anxiety. Connected to this also is some anxiety that can happen between husband and wife. And so, yeah, it can be devastating. And last, information overload. I find that the majority of traders try to learn too much. And let me explain what I mean by that. Is they jump in at the very beginning, especially when they're starting a new system or whatever, a new system, and they think, oh, I have to learn as much as I can, as fast as I can, so I can start. And part of it's due to, can you see the connection back to those other pain points? Is it too late? It's too late for me to grow wealth. And so there's this kind of, I won't call it a false urgency, but an urgency that can be gotten over. But they try to learn too much, too fast, not recognizing that it's and I hate to use the term, a marathon, not a race, but it is that where you can just take a look. I'm going to learn this amount. They take their eye off the concept of incremental improvement. Incremental improvement. And so that, one of the things I try to encourage people with the AutoPilot trading service is to take your first 90 days. And if we can get you to the point where you understand the system and you're able to put in, parallel trade with us, either paper trade or with real money by the end of 90 days, you have just developed a skill set that will, if you've taken it heart and you haven't went back to zero, the point zero, where you can now say, I have met this challenge and I am climbing Everest, and I can climb Everest the rest of the way. Now I can repeat this over and over again. And I'm getting off track, but that's okay, because I was just needed to get up on my soapbox to preach about that a little bit. But analysis by paralysis and distraction. And that's where I'm talking about. A lot of times I'll have people, send me emails about some subtlety of the system, but they're missing the meat of the system. In other words, they're settling for the chicken wing instead of the breast, if that makes sense. I hope it does. And if not, that was a really crappy analogy, and you can tell me so about that later. Okay. So eye strain and headaches from processing just too much information. I think that's one of the other reasons why I basically say, hey, cut it off. Cut off your time to be in the market and schedule your time that you're going to be in the market. So jumping over, I love this guy. Doesn't this guy look really smart and intelligent? I just absolutely love him to death. But there must be a better way. And the better way is to change the way you think. And now we're going to So are there any questions? Let me go over to any questions, guys and gals? Okay. What is taught you just of all the 12 pain points? Is there one particular one that just speaks directly to you? Please, I really need that feedback. I really do. And so if there's one, we're going to get into the fixes here soon, Jim. Overcome number 7. Okay, we're going to get into that, Ross. Great question. So number 7 spoke to Ross. Managing risk. Thanks, Sri. Always good pleasure to see you. Okay. Come on, folks. Which one has spoken to you? Are some of you guys multitasking out there? Okay, thanks, Brett. All right, cool. Okay, continue to dump some feedback there into the chat box. I really appreciate that. So let's go ahead and jump over to the 12 pain points and what you can do. And I'm going to approach this from a little different ways, guys. You're going to go, and I'm not going all new age on here. We're not going to, sit around the campfire saying kumbaya or anything like that. At the same time, though, Mark Minivy recommends that you learn to talk to yourself. And Jim, not Jim, but Mike Lamoth, my buddy from the other our live stream we do on every other Monday, from a mindset standpoint, recommends talking to yourself, journaling about it. So again, you can sit there and go, Dennis, you're out of your tree, and that's okay. I don't care, because I'm going to present this because I think it will. If you take this and use it, it's going to help the way you trade. So number 1 is consistent trading. What can you do about that? Well, 1, regularly analyze your trade outcomes to identify patterns and areas for improvement. Adjust your strategy based on this analysis. Education and training. Continuously educate yourself about the market, market trends, strategies, psychological aspects of the market, but apply the knowledge. Just don't take in the knowledge and become bloated with all these great ideas. The other thing you can do for this particular one, have an affirmation you write in your journal and you recite it to yourself in front of the mirror every day. And the affirmation for this is, I am committed to, and again, you're stating this for you and nobody else. I am committed to learning from each trade, focus on consistent improvement and decision making. Wow. That's probably more than you thought you're going to get today, but yeah, that is really huge. Number 2, lack of dependable strategy. The solution is dedicate time to developing a trading strategy that suits your risk tolerance and your trading goals. Now, if you need a trading strategy, of course, there's a lot of them out there and a lot of them available. Of course, I love mine. You can find it in my book, Trade Your Way to Freedom. That's, you can get that there. Our AutoPilot Trading members, we do talk about that kind of stuff. So the other thing, back testing. Rigorously test your trading strategies under various market conditions to ensure effectiveness. If that sounds a lot like doing simulations of your trades, that's exactly what it is. You need 400 trades before you really reach a point where you're ready to move in to become a master trader and understand your system. You can do that by simulating your trades. And guess what? I have an affirmation for this one. My trading strategy is well researched and back tested, providing me with a solid foundation for decision making. These are really good. I tell you, the writer of these, they're really good. Okay, what about the next one? The pain point number 3, emotional decision making. Emotional decision making, practice mindfulness to become more aware of your emotional state while trading. I know that some traders will basically ask themselves a question in the morning. And Mark Douglas used to say that. Ask yourself in the morning, am I ready to pay myself money, or am I ready to take money out of the market today? And if the answer doesn't come back a resounding yes, then get the heck out of the Dodge and do not trade that day. Do not trade that week. So create create a pre-trade checklist. Create a checklist to follow before executing trades to ensure decisions are based on logic, not emotion. Does this sound kind of familiar to the pre-flight checklist that we put out with the AutoPilot Trading service? The affirmation for this is 1, I make trading decisions based on logic and strategy, not on fleeting emotions. Pain point number 4 is understand your risk-reward ratios. Establish clear risk-reward parameters for each trade. Now, my risk-reward that I set up is typically somewhere between a 2.5 or 3 or better, 3 to 1. I want to make $3 for every dollar I risk or have the potential of doing that. And then I want to learn how to use stop-loss orders because they solve the problem of risk management, guys. So use stop-loss orders to automatically exit trades at predetermined levels, protecting your capital. I would not have blown up 2 accounts if I would have been utilizing hard stop-loss orders. And so, and then that would, if I would have been using those religiously, it would have kept me from developing some of the other bad habits that took me a long time to get myself over. So that's number 4. And our affirmation on number 4 is, I effectively manage risk in each trade, protecting my capital while pursuing profitable opportunities. Number 5, limited time for trading. Now, see this dude over here, he's got limited time for trading, right? I mean, he's maybe, how many of you are him? Here you are, you just got out of bed, you're having your first cup of coffee, and you've got both your laptop and your phone to check what's going on in the market. I mean, I know I can relate with that because I'm a trader. I mean, that's what traders do. However, I have to wear a t-shirt because I don't look like that anymore. Anyway, so with let's see, number 5, allocate specific times. Literally make a schedule. Get out. I don't know how many of you use a daily schedule, but highlight the time you're going to be spending in the market. Okay, specific times for trading to avoid conflicts with personal life or other responsibilities. One of the effective analysis tools is utilize tools and softwares that streamline market analysis and the trading process. My affirmation is I allocate my time wisely, balancing trading with other important aspects in life. Because I'm going to shout it to the rooftops, and I will continue to shout this: trading is not the most important thing you can be doing. It is basically it is important if you are trying to grow into trading for a living. It is, but it is not the most important, especially if you have family and you're married, or you have grandkids, or you have children. God's blessed you with those kind of riches. Take care of those riches first and learn the process for trading, and he'll add to that on the other side. Number 6 is the fear of making incorrect decisions. Decision-making framework. Establish a clear framework for making trading decisions to reduce indecision and fear. I suggest it being a mechanical system, because mechanical systems remove the guesswork. So understand and get to the place where you accept the losses. If you're trading a system that has a 65% win-loss ratio, it means that 35% of the time you're going to lose. So if you have a hang-up about losing, then that's going to be an issue for you. But recognize that losing trades are part of the business of trading. My affirmation on this one is, I trust my decision-making process and accept that not every trade will be a winner. I'm focusing on process. Number 7, fear of loss of capital. Only risk a small percentage of your total capital in each trade. That's what we do. We divide things in 7, but we divide things into 7 positions. But how much are we risking on each trade? No more than 5%. So even if each one of those 7 trades gets hit with my stop loss, I've only lost 5% of my capital. Get it? So diversify, spread your risk across several assets and strategies once you've built your assets or your capital up large enough. That's why I split between 7 to 8 stocks. Our affirmation in this one is, I trade responsibly, protecting my capital while being open to growth opportunities. Number 8, not reaching financial goals. Set achievable, measurable financial goals with specific time frames. What is your expectation? What's your number that you've put down on paper for this year, guys? Have you put down the number of I would like to earn 20% or 25% or 30% or 50%? Go ahead and write that down on paper. Use that as part of your goals. At the same time, compartmentalize that and separate it from your trading process. Because if you know your trading process, you know what it should deliver to you. And so not reaching financial goals, 1, we talked about that, measurable goals, specific timeframes, and then regularly review. And, at the end of every week, at the end of every month, I would encourage you, if you're an active trader, to review at the end of the month. Why? Because the fluctuations during the month will sometimes knock you off, off pace, or you'll be so it encourages you to be connected to the outcome rather than the process. So you want to stay aligned, adjust your trading plan to stay aligned with your financial goals. And of course, our affirmation on this: I set realistic financial goals and diligently work towards achieving them through strategic trading. Love this. Number 9, lack of clarity and confidence. Engage in ongoing education to enhance your clarity and build confidence in your trading decisions. One of the ways to do that is to focus on fewer stocks and or ETFs. Another way, seek mentorship from experienced traders to gain insight and boost confidence. This is one of the reasons why we have 2 mentoring days per week with the AutoPilot Trading, one on Friday, one on Monday, and then one special one for training on during the month. We're going to have that on Thursday of this week. So boost your confidence. And here's a really great one. I would like everybody to take a piece of paper out right now. Make a note to yourself. Take a piece of paper out from your journal, and I want you to write down what your best trade was ever since you've been trading. It may be, my best trade was a trade I made back on MasterCard back 14 years ago, one of my best trades. But I remember this, and that I need to remember these kind of wins. And I was trading MasterCard, and I had an option trade going on it. And I think the option trade came and we hit it, and it was just absolutely beautiful. And I took a profit out of the market about $6,000, right? $6,000. You can tell it's etched in my memory because I know the number so well, and that was 14 years ago. Well, what that did was, that was the same weekend that Brandon and Sharon got married. Brandon's my youngest son. So that $6,000 in profit, guess what it did? It helped pay for Brandon's wedding. Isn't that cool? Now, that's a win that if I remind myself of, it helps me stay clear and confident about what I'm doing. So you develop your own story about a win that you've had in trading. It may be a recent win, but I want you to focus on that and remind for the next month. Remind yourself of that win. Go read what happened about that win, and it'll set you up for a better mindset. And so, okay, that's a freebie. So, okay. Here's my affirmation on this. I am constantly improving my trading knowledge and skill, building confidence in my strategic decisions. Number 10, impact of emotional well-being. I have to understand that I need a work-life balance, ensuring health balance between trading, personal life, and maintaining emotional well-being. I don't know about what you do, but what I do is I run the hills of Makakilo. I live in a very healing place. I'm about 1,000 feet above the ocean here in Hawaii. And I go out and I run the hills. And here recently, I've dropped my mileage, but I'm now doing sprints. And so I'll do 6, 10 or 15 second sprints. And you should be surprised at how old a 72-year-old guy can run when he's doing sprints. I know when I first started doing the sprints, I felt like I was going to fall on my butt, but my coordination has come back. And so I'm not quite ready to run past patterns yet. But let me tell you, that's what I do to chill out, and take care of my emotional well-being. Connect with other traders. I'm trying to get together our Discord channel for our AutoPilot Trading members so we can connect. It's such an important thing to be in community, because each one of us is either going through the same thing or we have gone through the same thing. So what is my affirmation? My emotional well-being is a priority, and I maintain a healthy balance between trading and my personal life. So number 11, the concern that it's too late to build wealth. And I refer back to my earlier statement that basically says it is never too late to become the person you want to become, and it's not too late to become the trader you want to become. And it's certainly not too late to start building wealth. Even if you're 95 years old, think about the story you're sending to your family, your great-grandchildren, your grandchildren, saying, hey, great-grandpa started building wealth at 95. And he laid down a legacy of doing that. Think about what that would mean to you and your family. Did you know that the majority of successful people who reach great wealth actually had their biggest breakthrough, you ready for this? Between the ages of 65 and 75. 65 and 75. So if you're below that range, guys and gals, you can do it. I mean, basically just plan it out, make it happen, and it's certainly going to be better than if you just talk about it and don't do a darn thing about it. So with this, it's never too late. Focus on long-term wealth building rather than short-term gains. 1, celebrate small victories. Again, it gets back to that incremental thing. My wife and I were talking, Michelle and I were talking, so I said, sweetie, we really need to celebrate our small wins, our small victories, and get excited about that. If you had a successful week this week trading, dadgummit, go buy you a soft drink or do something really cool. Go down and get some ice cream or celebrate it loudly with the people you love. And it'll help embed in you the emotional strength and emotional mindset of a winner. So celebrate small. And so it's never too late to build wealth. I am committed to making consistent, incremental progress. So informational overload, concentrate on a few reliable sources of information to avoid overload. Turn the notifications off on your phone so that it's not constantly beeping at you to say, hey, pay attention to me, because it will it will basically disrupt you from your focus on what you need to be focused on. Allocate specific times for learning and research to prevent informational fatigue. And again, turn off the noise and the chaos. Take off the news feeds and basically say, this is the time that I am dedicated and investing in my success. Of course, you're not going to say my success, you're going to say your success, but that's what it'll sound. So what's our affirmation for this one? Is I selectively consume information that enhances my trading decision and avoids unnecessary noise. Unnecessary noise. Okay. Hey, just a reminder that if you have not seen or gotten the book, Trade Your Way to Freedom, it has been really good, but I share all my secrets there. I'll put a link when I post this on how you can get it. You can also find it there there's a little note there for Amazon, and I'll basically drop that into, where am I going to drop that off? I'm going to drop that in. Sorry about that. Here you go. I know the majority have probably already read that, but there you go. I'm just getting used to using StreamYard, and so I don't know if you can copy and paste that that Amazon link or not. So, okay, basically that's it. Any questions for today? Now, I am going to jump over and just do the regular Bay Area moneymaker business, but I would really like to know. Okay, thank you, Jim. Appreciate that. So again, now that we've gone back over that, I know some of you had laid down the specifics on the number. Did my response for the solution, did it help you with those? Brett, I see you did number 12 and number 6. Great trader therapy. Thanks, Ann. Hey, Rail, how you doing? Excellent, guys. Thank you very much. And so hopefully it provided a bit of clarity. Now, before you poo-poo the affirmations, all I can tell you, and I'll go back to what Mark Minervini said, is basically he said, whenever you find yourself making a mistake in the market, do not slam dunk yourself. In other words, don't go and beat yourself up. Don't turn to the negative expectations. He says, ask yourself a simple question. One is, and the question is, what can I do differently? And not necessarily even what went wrong, but what can I learn? What can I learn? And that's the other reason why you need that journal to be able to write down what can I learn from what just happened in the market? Because it gives us lots of lessons every day. So let me jump back over here to this. And if you do have any more questions, yeah, please go ahead and drop them in the hope I didn't just, oh, there we go. Okay, so I am going to go through this really quickly. There we go. Okay, just real quick, reminder that all the materials we do present are for training purposes. And this is one of my things. Here's what we're doing so far this year. This is what we did, through 2023. The AutoPilot Trading's in the green. And I always like to show this. This is our PL curve from last year, and it really reflects the ebbs and flows of the market and how it's different every year. And so I never get too anxious about like right here in March. I was behind schedule. I knew that if I continued to trade my system, I would wind up at the end of the year close to 40%. And that's exactly what happened. Then here's where we're at as of close of business today. Really big turnaround in the market that we saw. The market after the Fed meeting, the Fed coming out mixed, but saying, hey, we're probably going to do 3 rate cuts this year, which that could spur the economy to continue to grow nicely. And so I gained about 3+% today because of what we are currently invested in. I want to share a couple, and then what else we got going? So on the 23rd, let me go back here. On the 23rd, which is our next session, Anil Parikh will be presenting for us on the simplification of the other complexities, part 3. He's going to be talking about his system and some of the other things that he's learned. I will follow back up with a session on May 19th. I just blew up my account. What now? we'll get digging into what do you do if you're trying to build your account back up. John Pocoroba is going to be with us on June. Lee Tanner, my good buddy, my good Navy buddy, will be with us in July. So as you can see, we've got one heck of a great lineup going forward. Floyd Dameron from Alaska is going to be doing TQQ for us in the future. So I'm really excited about that. And go there. Get out of there. Come on, go back, go back, go back. So there is Anil's time. Now I will take the next approximately, what time is it? Yeah, I'll take the next 10, 15 minutes to do charts if you would like to see some charts and look at some, but you got to let me know what you want me to look at. Excellent. Thank you, Jim. So let me get my any stocks you want us to take a look at. Let's take a real quick look at what the heck, the futures are up. So that means that probably the NASDAQ is going to be moving up in the morning. We'll see what transpires. Now recognize I'm going to move my, now this is my strength. This is like my superpower. It's being able to do technical analysis. And as you see, we've come down, bouncing off the 8-week moving average right there on the weekly chart. And we're bouncing off of the 8-day moving average, well, breaking out above the 8-day moving average here on the daily chart. And I would look towards potentially something on TQQQ, also bouncing up very nicely there. Nice move up. This is a classic move right here. I mean, this is really pretty. Notice how we've had two things happen here that we should want to take attention of. One, we're breaking a flag back up to the upside. That's positive. Two, we are breaking momentum back up to the top side from the zero line. That's also very positive. And so that could lead us to a potential trade on TQQQ. What about the Russell? The Russell could the Russell be happy? I know that sounds goofy, huh? Could the Russell be happy? Showing happy feet because the Fed has said that they plan on. One of the things I do is once I have a new swing low in place, I will revise my uptrend line because I actually want it to be leveled out where it's more like about a 45-degree angle. And what I'm looking at is that's exactly what's happening here. So came back to the 8-week moving average and bounce. I will look at potentially a trade on IWM at about the 204 level, which means I'll be taking a look at TNA. Oh, thank you, man. Excellent. And so again, keeping your eye on that. Often, one of the things that I always encourage people, what is your go-to? What stock or ETF is your go-to that you can basically, if you had to make some profitable trade with a real high probability, what stock or ETF would you go to? And have that all set aside for you so that when you are analyzing, regardless of the market conditions, that's where I can go to potentially make money. So TNA is always a good one. One of the things that we did with the AutoPilot Trading service this past earlier this week is we were taking a hard look at a couple of the crypto mining companies. Now, Coin is not a mining company. I think Reto, thank you very much for that email you sent back to me. I appreciate that. But as you can see, this is a nice move on Coin. almost a little bit of extra, almost up to average volume. And so it needs to, okay, if this is a flag, it will break out and move higher. A couple of things that I would want to do on coin, how far might it go? Well, I'd come over here and just grab the, from this low here to this high here. Let's go ahead and just grab that as a potential move. And this is just the simplified mechanism. So I'm going to go here, grab that, go to that low right there, grab that, put that in place. There we go. And then that gives me some upside targets. And if I hit the 1272 extension on coin, that's up at 299. And the next one up from that is the 1618, 339 on coin to the upside. So that looks very positive. Well, I like the setup on Mara. And this is kind of really pretty. It came down here, found support at a past support area over the last 4 to 5 days. And so if somebody took a trade, and I think Jake may have traded this one, if you jumped in it right here about 170, about 17 and some change, right there about or $18, well, that sucker right now, it has gone up over 20%. Now, when you find these special cases like this, you can see it's up almost 25% in a day and a half. The fundamentals on Mara are not great, but what is great about it is its technicals. Technicals look dynamite. I can draw a line across here. As you can see, I have broken structure to the upside. Now, my expectations of this trade to see it to see it moving all the way back up into this area here. Now, is it going to get there in one fell swoop? I don't know. But I could definitely, if I'm in a trade on this, I can take some profit at 10% or take some profit now. And then my other upside targets from there, I would say, if I jump up 25, 34 or 27, up to 27, and then an ultimate objective would be to get up to about $31. And so short order, I'm expecting it to do something similar to what it did over here. And it ran in I'll give you a number on that. In 21 calendar days or 15 trading days, it ran up 110%. That is rich. Its cousin, redheaded is also doing something similar. That's Riot. Riot is came down here. I think we did a trade on Riot at about 1050, 1065. And it also has run up about 15%. We've taken, so you're in Riot. Okay. Yeah. Really nice looking trade to the upside. And especially if we break out above the 50, like it did over here, if it follows a similar pattern, it's not going to come back a lot. And it has done that similar type of pattern multiple times. Look over here on the weekly chart. You can see that's been the case. So those are a couple. I'll just leave you with those. 1090. So Jim, did you get in it also? Let me get my drawing utensils here and go back to my charts. And okay, let's take a look at, let's see. Cool. So Kava. Yeah, Kava's I think it's a newer entity. I think. Yeah, it is. And what is it telling us? Basically, it's telling us that, it's kind of doing one of those Arrivederci baby thing and taking off. It is turning back up on the daily charts, and the weekly charts is still looking really, really strong. It's gone up over 100% in a very short period of time, about 126 days. And what was the low there? Let me go back and grab it again. Yeah, about 132%. So excellent. One of the things I've modified in what I'm looking at is I'm looking at the 8-period moving average. And 8-day period moving average turns out to be a really good line of demarcation to basically trade things off of. And I put in the 1.5 ATR Keltner channel around the eight period moving average, and it does a wonderful job of containing a huge amount of the price action, about 95%. This is in a very nice strong uptrend. And who asked the question about Kava? Ross, if you're already in Kava, I would, you need to plan where you're going to want to take profit. If you're, are you in Kava right now, or are you looking to get in? Because for me, I'm looking at a pullback into the 8, which the 8-day moving average tomorrow is going to be about 65. I would also look at the midsection of today's big green candle as a potential to jump on board. And CPNG, I'll come back to DraftKings in a second. Oh, this is kind of pretty. Yeah, great. What do they do? Okay, is this a Chinese company? Raul? Yeah, it looks kind of interesting. Look over here on the weekly chart, though. It's kind of moving between $13 and all the way up to about 19. So what kind of a move is that? So it's about 46%. So that's of interest. I'm careful. Korean, you think, okay. Off of a strictly, okay, we had a breakout from down here, and also kind of there was a little bit of a level of support right there about the 1775 level. I like that it closed above the 8, so I could use with a trigger like that, I could use that as an entry point, and then how far of a drop? Yeah, and my swing low is less than 5% away, 5 to 6%. So that looks pretty good. I like this initial move. The only thing it's, okay. If you look down at the volume rail, you see that it's kind of low, but we had huge buying volume here. And so we know the buyers are still there. This was just some profit taking, and now we're trying to rebalance it back up to the upside. Excellent. DraftKings. Yeah, nice breakout to the upside. Oh, what are you looking here? Check it out over on the weekly chart. This is DraftKings, right? Yeah. Did they have a split recent? Because it wasn't. Yeah, Ross, did DraftKings split? I don't see a split down here, but I thought it was more expensive than that. But yeah, it's moving on up. Look at buyers are in fact coming in. We're breaking out, and we did break out above that high right there. So yeah, that looks pretty good. Again, I'd be looking for my 8-day to catch up with it. And now it's just a reason to be patient with it. The other thing that I'll be looking for also is you could also double down and look for a bounce back off of the next week's 8-week moving average will be about $43, which is right about that 8-day moving average right there. ARM. Yeah, Barb, I was looking at this earlier today. This is looking really nice. Okay, let's digest this and dissect it really quick. Is on ARM. We do have a breakout on the momentum on the daily chart. Let's see, it has the Okay, the TSI, the RSI has almost broken out, but I'm getting a the thing that I didn't like about ARM is note that my volume is still really low. So, but it is bouncing off of a level of support. And so it has but it's a really small flag down to the 8. So, one could say, okay, I have my close above the 8. I'll take that a trade off of the 8, and then my swing low there is about 6.24%. So I still like it at a lower level, but it looks pretty good. So okay, any other stocks, folks? Well, for everybody on the East Coast, thank you very much for joining us. I'm going to basically call it a day. And if you've joined us over there on the YouTube channel, please leave some comments and make sure that you. How did this work using StreamYard versus using Zoom for doing the webinar? That's the other feedback that I need to get, guys and gals. I mean, if it makes no difference to you, this is a lot an easier system to use. Yeah, but Jim, you're so agreeable, man. Anybody else? Okay. So yeah, Ross, I covered the ones I was interested in. I am. I'll basically. I'm keeping my eyeball on the Mag 7 because I want to have some long-term investments there. I really like Amazon of all the Mag 7s, and it too took off today, but on low volume. Okay, this is a move up on low volume. And it's got to get back up above the 180 level, which is only a couple bucks away. But you got to remember, Amazon is not the beast that it once was. Notice this. Gosh darn it! Stop it. Notice how this trading range here is that's 5%. That's 5%, and so you could literally buy Amazon at the 8-day moving average, and your 5% stop loss will be down below the 50. And so that's one of the ones I'm interested in. I'm not so much interested in NVDA. And yeah, NVDA is doing awesome. It may break out of its own flag. But one thing I noticed about NVDA, it is hammering down its moving averages. But it's still being the beast. Apple is breaking structure. At the same time, though, it is still below the 50-day moving average and the 34-day moving average. And so I would, if I was going to buy Apple for a potential run back up, I could do either one of two things. It is so close to the 50 and the 34 that I'll probably wait for a secondary setup on that. And the secondary setup would look something like this. Maybe go up, come back, maybe test the downtrend line to kiss it goodbye, and that would be the entry point. Oh, okay. Thanks, Jake. And so that's what I'd be doing with Apple. And what is the other one? And again, what about Tesla? Tesla. You got to be able to type it. So Tesla. Okay, the big thing about Tesla, yeah, it's doing an initial move up to the upside. There's a couple of ways I'm looking at Tesla right now. Remember, this move up here, I said it when it was doing this move, I said that is a weak bear flag, and it may be putting in another bear flag. And what's interesting is I threw a Fibonacci on this earlier today, taking it from that low to that high there, back down to this low, to that low. And note is if this puts in another bear flag, that 100% retracement, symmetric retracement, is going to take me to about 191, which is going to be almost right in line with the 50-day moving average. What are the red arrows on your chart? Oh, you mean like this over here? That's just basically telling me that my market forecast is crossing down below, down into the lower, off of the lower reversals line. That's what that is. And so I'm sitting there going, we're getting, so remember, it is still in a downtrend, a big downtrend. And so I think the upside potential of it is, let's see what happens when it gets up to the 8-week moving average, which is going to be about the 181 level. And this week it is all the way up at 188. And so the 188, if we break that and then put in a higher low and then bounce up, then I'd be interested in Tesla. And the other thing I would be looking at, if you want a really kind of cool ride, is check out the 1.5 times leverage ETF for Tesla, which is TSLL. The other one I will take a look at, Amazon we talked about. Google's another one that looks kind of interesting. Google gapped up very significantly today. So we know we have a strong level of support between the 146 and the 143. It's a $3 gap. But Google is a lot like these other Mag 7 stocks, is they don't have the juice that they used to have. They really don't. When it was the FANG stocks, go look, that's 16%, which is fine. That's a great run, but they're a lot more tamer and calmer now. So, okay, folks, that's it. I'm going to end the session. Thank you so much. And as we like to say, okay, I'll do those 3 really fast. Hold on, Riddle. So I've got fun FNGU. Yeah, it looks interesting to the upside. FNGU. Yeah, as I've said previously, FNGU just doesn't get me excited, primarily because it doesn't have any. It doesn't have any options. That is basically, yeah, it is optionless. And I like to trade entities that do have options. It's still moving up. Well, what kind of a move are we expecting to get? Even if it moves from there back up to the high, it's about 16%, which is good. But I think there's, I wouldn't want to, I think there's better trades out there. And so, here you go. Hey, Ross, just send me an email and you can get me at, and I will send all that stuff to you, not dentist, but at auto. There you go. Appreciate that. And Redo, you had MU? Okay, MU. Oh yeah, okay. Buyers are coming into MU very nicely. What is this? Micron technology. And again, I go back and say, okay, what's that? I'm getting 12%. That's not bad for a move like that. MU for those, and so yeah, it's making some good moves, Redo. As you can see, the market for the momentum has started to shift up to the upside. If you're interested in buying it, I would look at picking up off the 8-day moving average about the $95 limit tomorrow, and you can still stay above, as long as it stays above the 34. Your risk wouldn't be any more than 6%. And then Marble. our Marvel. That's also looking really good, really good. Past support, TSI, or the momentum looks like it's wanting to shift up to the upside. And as you'll note, it's actually coming back and retesting a breakout area. So that looks pretty good. Volume looks pretty good also. So what if it took off from here and went back to the highs? Yeah, look at about 28%, Riddle. I like it. And so, okay, guys, that's it. I got to go because I've got to go to a graduation ceremony this evening for one of the people from our church. So aloha. God bless. Have a great, great rest of your week. And if you're a premium member, see you tomorrow night because we're going to be talking about that 8-day moving average. Aloha.